Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up. And this wrap-up is for Wednesday, and we're now at the 21st of July. I almost said June there, July 2021. All right, my friends. So we have all kinds of crazy things going on. Look at how hard AMC got hit. This is a bounce back. It was down another $2 plus from that. I feel good in what I said. I didn't think that movie was going to rescue this market. And I didn't understand why the stock was falling when it said it wasn't issuing more stock. Look at how ARK has come down. Remember, we were looking for the market to peak out on the last rally. We'll cover that right now and get to that. There was an FOMC notes released today. There's no big changes in them. We certainly have problems with the COVID-19, the Delta variation, and it is starting to swamp hospitals, Missouri, the South, areas where people don't believe in getting vaccinated. And watch the statistics. See who's on the life support machines there. You're not going to find the vaccinated people getting the COVID there. You're going to find the unvaccinated. However, people have a right to what they want to do with their body. The problem is when they get out to other people that aren't vaccinated, they keep spreading it, and then they want everybody to help them, and that's the difficult part. The help is to get a vaccination, as we all know. What can I say? In ARK, well, you can see how the market filled that gap. There was another gap right here. Now all the gaps are filled on the charts. When I look at the pattern, we had a pattern develop of lower highs, lower lows. The first objective when you get that, if you come down, is the 18-day moving average of closes where you're at. Breaking from here gets much harder now. You're into support of that, the 100 and the 200-day average. The market has set itself up in a true bullish formation where the 18-day got over the 100, the 100's over the 200. If it's going to hold, this washout takes people out, and the market tries to figure a way back to the upside. Where did the market have its problems? When it broke away from the Bollinger Band and broke right here. That was the end of the bull run under 127.28, and now, as I call it, I see neutral land at this point. What else happened? Remember, if you've taken that enhanced Bollinger Band course that I have, you had a 79.14 reading, a big worry. If you didn't immediately this morning when you open, re-embed, and I mean immediately, give it no more than a half hour, you got a problem. And that's what it did. It never recovered itself. It made its high on the open, kept falling. You've lost that reading. But the downside target is the 18-day average. I think the smart money took advantage of that and walked away. BBEU, again, you have an oversold market in a downtrend, but if you take out right here, 59.04, you didn't do it today, but if you do, I wouldn't be surprised that you rally back to 59.51. There's contra-trend people that will look at that formation and say, okay, I'm going to buy it at 59.05, put a stop under yesterday's low of 58.37, and I'm looking for 59.51. I'm not saying that's a good trade, bad trade, but I understand the thinking of it. PAVE, you know what's going on. President Biden's everywhere promoting his infrastructure. So you pulled back to the 100-day and immediately back to the 18. The trend is still down. The bias is up since you're over that number, and you're starting in overbought territory again with the reading of 71. AMC fell back to the lower Bollinger Band. Now, you could get a breakout if you had a sharp day down tomorrow again. Without that, the odds favor you capture these people and you get back into the Bollinger Band. We'll see if that occurs. I said yesterday you've got to be careful in this market to my traders. So here we are in the close of business yesterday, still with an embedded reading, but an outside day down. Not a pretty sight. If you take out today's high, market can rescue itself. It's got to make a run then back to the upper Bollinger Band. But if it doesn't, be careful. You look right away and you lost the embedded reading again. So that probably means the 186.01 level, the target, and guess where you want? 186.16. We'll see what the market does. The problem is the trend is down, the bias is up, and momentum's turning down. Any close under 186.01 is out and out bearish, not the way that I teach charting. PODX, I was looking for support at the lower Bollinger Band. Well, you're in it. If you embed, you're going to start pushing, the possibility exists. I wish I knew that it was going to do. The possibility increases that you're going to start pushing on that, driving this even lower. There is nothing pretty on that chart. ESGU, fully embedded reading. Every day it makes a higher high. It doesn't let you into the market. You need a break. This is called that gorilla glue trade. You've heard me say that over and over. You lock in on that Bollinger Band and you don't give it up. It just captures the shorts in the market. People are going, what's going on? Suddenly it's on their radar screen and they're looking for breaks that they don't get. XLE, I'm looking for support now between the Bollinger Band right here and the 100-day average. I think the quote-unquote smart money came out today, completely out of any short ideas that they had. The emerging market ETF, okay. If this market can clear yesterday's high of 79.40, it would be the first sign that the market wants to make a run back to the 18-day average of closes. Barring that, I'm just looking for a drifting market. Not much. I don't see a trend to trade, bullish or bearish. It's too oversold to be bearish. GLD, we're in an important zone in the market. It's managed to, for the first time, to get up and close over the 18-day average of closes. Notice how you're going to do possibly, if you go up from here, what I call a kiss. The 18-day average will skid along the 100 and try to turn back up. If the market's bullish, it's got to clear right here, this 169.65, which puts it into the gear of 171.56, the 200-day average. This is the first higher close since early June, so it's been a month. You lost the embedded reading. So where's the real play that was here? When you lose the reading, the game is over. That's what I try to teach you. You closed over 21. Market first objective, the closest moving average, but then you've got, if it wants to continue, the all-important average. And yeah, that's to me the all-important average, the 18-day, and that's exactly what this market has done. It's playing right there. The gold miners, you lost the embedded reading. Ira Epstein wants no part of short positions, telling people, if you take a look, when did you lose the reading? Yesterday on the close. You didn't have to wait for that challenge going on. You'll say to me, well, Ira, it didn't really come back up here. Oh yeah? I think it's going there. That doesn't mean I'm right, but I think it'll go up and challenge that 200-day and the 18. Does not mean I'm bullish. I'm not. I have nothing. It's just a momentum trade where the market often goes there, period. TLT, did we not say if we cleared that number, we might make a run for that upper 200-day average? That's a real problem for the market. 200-day averages, you just don't go slicing through like they're nothing. You can do it, but you'll see within days, analysts know what's going on there. That's the battleground now. FXE, which is the euro, higher high, lower low, falling away, still bearish as can be as the dollar reigns supreme, and people are scared. You know, as our interest rates are going down, what if the Fed isn't going to raise rates? Do you think Europe wants to do it before we do? I don't think so. You know what the Reserve Bank of Australia said? They intend on being one of the last central banks to raise rates. Came out and said it. I wrote about it in my report today. I found that fascinating. So they're telling you, let other people be first and slow their economy down. People want to make sure this economic growth goes. I get what Australia said. Remember, they shut down Sydney and they've had other areas where this new COVID strain has really proven to be a problem. And people, that's the other issue. There are people all over the world that would love to have the vaccines we have sitting right now idle, and people don't want to use them. At some point, we should give them away to people that want them. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.